Today we're going to talk about refinancing commercial mortgages. Most people feel that a commercial mortgage, it's based on the value of the building. We've got a commercial property worth $4, $5, $6 million. Well, we should easily be able to do a first mortgage of 65 or 70% loan to value. We have the value of the real estate in a good area. We should get a mortgage. And most people that own buildings or own property feel, I should be able to get a bank mortgage. I should be able to get an A mortgage. Well, it's not that simple. You know, commercial lenders, they need a number of criteria in order to give you, especially when we're going for an A-type mortgage, you know, the best rate that we can get in the commercial market. So for instance, a challenge that we had or the owner of a commercial property had. So he had a building that was worth about $4 million. So he came to us. Now he had an existing first on there of $1 million. Now, the first mortgage of $1 million was with a trust company and it was coming due within the next few months. Now he's having a problem. Now what was his problem? He felt that he should have an A mortgage because his building was worth $4 million. Now the challenge he was having was twofold, two things. One, the building was half empty. That was one. And why was it half empty? Well, the building needed to be updated to be able to get some good tenants in the building. You know, he had some month-to-month here and there, but he really didn't have some good tenants. So he needed to get and attract good tenants. And number two, he had a roof that was badly leaking. So one sort of caused the other in a roundabout way. And overall, what was happening is because he had a vacancy that was fairly high, it was taking money out of his own corporation to keep this building going. So then, because of that, he didn't have good financials. Okay, now, so the first mortgage lender basically said, you know, when the time comes, we'd like to be paid out. We're not renewing our mortgage. You know, your building is half empty and you've got problems and we're an A lender. We don't want to deal with that. We want to get paid out on the mortgage. So now this person that owned the building came to us. Now, you know, we explained to him, you know, we're not going to get an A mortgage. You don't have the cash flow. We needed to figure out who was going to give us some money to fix the roof and to fix up the building. So it was sort of a two-tiered approach, two steps. So first step was we got a private lender to bridge, and the thing is, it's not just a bridge, it was even a bit longer, because even though we're going to fix up this building and we're going to do the roof and we're going to allow him to do the repairs, whatever is necessary so that he can attract some good tenants, to attract the tenants, to do everything he needed to do was going to take some time. So he needed, you know, maybe a loan of 1 year with maybe a renewal or maybe a 2-year term. We ended up getting him a 1-year term with a 1-year renewal. Now he is trying to attract a tenant, which we have every confidence that he will. Once he gets those tenants in, the cash flow is better. Now we can go to an A lender and get him an A mortgage. If you need more information, give me a call or send me an email. If you get my voicemail, leave your name, phone number, and the best time for me to call. Your call is important to me and I will call you back. Look forward to speaking with you. Take care.